Good morning. 8 o'clock in the morning, Central Standard Time, the 14th of October. My. So, another interesting overnight. Now we're going to be opening in a gap down. Looks like the sell-off is going to maybe continue here. Welcome to Risk Neutral Trading. This is my virtual trading journal. It's not for financial or trade advice. There's a disclaimer in the description here. The idea of this stream is that journaling is important in my opinion, and I don't multitask well. So by streaming like this, I can capture everything I'm watching on my monitors, and my voiceover provides some insight as to what I was thinking. And then I don't have to be doing screen snaps and, typing in the journal and all those things. Also, this provides a complete, transparent, and fully accountable record of this account and my journey here. There are absolutely no trades taken off the stream, and that's the reason the stream is so long. Every day it's from 8 o'clock in the morning until 1500 or a little bit after every day, the entire cash close. I'm not monetized in any way either, so your likes and subscriptions and subs and drop something in the comment is big help. And remember that this is my journal, so I'm talking to myself most of the day. All right, what are we doing here now? It is Tuesday, and we have, again, with the government strike in motion, continuing. No real numbers out yet this morning. We do have the most important thing on the docket today, report-wise, is Fed Chair Powell speaking at 11:20. Right now, in the absence of any kind of, PMI, CPI, any kind of government-generated or provided data, the market is kind of looking for anything they can hang their hat on. Last Friday was a perfect example of a tweet that was basically unsubstantiated. Market sold off 227 handles ES. So this is my investing.com. This is free. You can filter it to however you want. I like the presentation here, and it's great for screen snapping and putting in, if I'm going to paste this to Discord and stuff like that. You can also filter it for anything you want. This week we have some, hopefully some news coming out. Retail sales, we'll see how that works. Crude, we'll get that. The Philly Fed will definitely get, because that's not government related. And the big open question is if they're going to ever release non-farm payroll down here. They keep moving it out. It was supposed to be 2 Fridays ago. Also, it's exciting to know we are in earnings season, and we've got the financials reporting today. And of course, they're all killing it. So there you go. The second news source that I use is Financial Juice, and it is more of I don't like the presentation of the docket as well. Just is not easy for me to read over here, but similar. You can filter. However, it does have more of a squawk box feel on the right side, and this one is also free. So there you go. Moving on to the pre-market here. If I can find the mouse and change the time, that would be pretty great. Come on, man. What time have we got here? Well, we got 4:50. Okay, sorry about that. It's this hassle with the chapters. Obviously, we're looking to open gap down. Here is our low, etc. yesterday, and here we are today. So we're looking at a gap down and a continuation in the sell-off. This is the investing.com, and these are the ES Mini, the NQ Mini. This is my ES higher time frame chart, which is a micro composite. Very simply, it is the daily session, RTH session, and these are daily candlesticks. Wherever they overlap, I draw a volume profile around them, and in so doing, it generates the high and low volume nodes, which are represented by these red and green lines. Just of the you see high and low volume nodes of the volume profile. Also, we have a micro composite VPOC, and then these are the naked volume points of control from obviously all below us because we're at all-time highs. But we're gonna tear up China with 100% on Friday, and here was yesterday. So there's the naked volume point of control from yesterday, and then we have one up here, down here. I'm sorry, for Friday. These high and low volume nodes push automatically to Bookmap, as do the session prices. And this is the market profile for the ES. I would guess that the volume is probably high. Let's have a look. Change that to the RTH session, or the full session. I'm sorry. So here's the full session. We're at 246% volume at this point in time compared to the average. And our ATR is way down at 250. Now I'm gonna jump that back to well, we'll do it later. Okay, so let's look at Bookmap. Here we go. The dome. I hope you know that. This is the micro composite column where I enter these values manually, the POC and the naked volume points of control and previous gap low, gap high. Don't need them anymore. And here are the high and low volume nodes, which push automatically to Bookmap from IRT. This is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. This is the full session, or the Globex. It's not the ETH. RTH session volume profile, which will reset this morning at 8:30. In my notes column, which is pretty important to me, we'll talk about it in a minute. And these are the session prices pushed from IRT to Bookmap. Now, a couple quick things here. The session prices are just that. There's nothing magical or mysterious about them at all. There's the IBs, which confuse some people. The IB high is just an acronym for initial balance. All these two levels actually represent are the high and low of the first 1 hour of the RTH trading session. That's all. Nothing else. We have a VWAP for the RTH and a VWAP for the Globex, which is a calculated number. I have no other indicators on my Bookmap or my IRT charting. There's a mid for the RTH. And I have a POC for the full session and a POC for the RTH session. The full session is kind of this muted yellow boy here. And all the POCs really is a price marker for the price at which the most contracts have traded so far in the session. So 39.20 is the price at which the most, 66.35, whatever that is, half, is the price at which the most contracts have traded so far in the full session, which looks about 39.20-ish. Okay, that's pretty much got the prices. I always put this blue line here at the start of every session. That's just a visual marker for me to be able to glance there and be sure that I have the entire session in view on the chart. That's my new thing. And let's talk about this important column. The first thing I do is change the title of the column to represent the open type expected for the day, for this session. And that's going to be lower out of range. And how do you detect that? Well, pretty simple. If we opened right here, there's only two criteria. If we opened right here, right now, where would that open compare to, or how would that open compared to the previous RTH close? There's the close. It's lower than the close. How does that open compared to the previous RTH range? Well, there's the previous RTH low, so we are lower than we are out of range because we're lower out of range. So we are below, lower than the close, and out of range. That's the open type. Now we can use that to get the statistics for the associated price levels. And so the next order of business is to clear the notes from yesterday. There we go. And let's look at some of these statistics. They come from this study in IRT. And here are the four types. And here is lower out of range, where we will be today. So the study looks back at 2,000 days. Of these 2,000 days, trading days, we opened lower out of range 290 days, 14%. Of the days where we opened lower out of range, we revisited the overnight volume point of control 82.8% of the time. That's all there is to it. Now I'll just go down the list. IB high is 69.7. That's right up here. And I do this. Why do I do that? Because the moment we open the new RTH session, this flag, the IB high, will be marking the high of the current RTH session. So this is going to move from here. And I'll want to know what that statistic represented. The overnight low is next, and that's 69.3. Overnight mid is 67.9. And I don't see where that's hiding, but it's around here somewhere. It's right up here, okay? We'll put that right there, 67.9. See how this labels, there's the overnight mid, right? So it's right in that area. The previous low is 68.9. I'm sorry, 66.9. And that's right here. So they're right together, aren't they? That's pretty close. So let's slap that like that. You can't do the flags one on top of the other, so that's how I do it. Shoot your best shot. IB low is 60.7, and I believe that's also hiding right here. Do you see where it's, you See this green line? That's the IB low. I'm not going to throw another one under there. That's stupid. Value area low is 47.6. Previous close, that's a good one. That's 43.8. 43.8. Let me see if I'm doing something. I'm hearing bells go off here. Oh, okay. Calendar thing. Overnight high is 33.4. And you can, put as many of these in as you feel comfortable with, or as you feel do you some good. Huh. Let's see what else we've got here. Value area low. That must be lurking around here somewhere. 47.6. Now the value area low and the differs from the developing value area high or low in that it is for the previous auction and the developing is for the current auction. Okay, so there we have that. The next thing we're going to want to be able to do, I suppose, is to be able to trade, wouldn't you think? The way we do that is you have, in Bookmap, you have to activate the trade control panel. And then you have to choose a way to trade with your mouse and the application. If you choose chart, the only place you can trade with your mouse is right here in the chart column, the active data column. The dome are the only dome columns, and then both. There we go. I need to use multi-brackets, and this is where I introduced the risk-neutral methodology. You pick a size of your package, and in this case, the 2 lots is the smallest risk-neutral package you can use because it must be an even number. And then you choose a stop loss in ticks in this application for the complete package. And how do you pick that? Well, the first thing you better be doing is you better be using your account risk tolerance. Your mission as a trader is to preserve your account. That's the main thing. And then to grow your account or compound it. So you better make sure that this risk tolerance gives you a lot of runway and also take into consideration the volatility of the market. After this is selected, the first take profit target is a slam dunk because it's for half of the package. And it is for the exact same number of ticks positively as the stop is negative. And then there's a runner. And if you have, 4 lots, high volatility, more stops, and there are the 24 ticks, 2 contracts, 4 contracts, and the rest of the runners is up to you. I also do the multi-trading thingy, activate that. And then, because I don't need the rest of the functionality in the trade control panel, I already have multi-brackets. You'll notice that these intraday metrics are all replicated up here. So I can confirm the package size, and I can click this button again, and now I have my real estate back. I'm all set up to trade with my mouse, and I have the cancel and close all orders and all the metrics. There we go. Okay. Oh, there you go. And now I'm going to do something which I do every day, and that is the TLab snap. And what is the TLab? Well, is Bookmap Discord chat room called the Traders Lab. It was started by a guy named Tom B, and it continues to be run by him. And every day at around 6, I post the numbers in there, and every day at 8:20, I post this view to give other folks in there an overview of all the potential numbers that might be applicable to the day and kind of where we've been from previous sessions and stuff like that. Just out of courtesy to Tom. Now, one thing about it, it is obviously it's a Bookmap Discord area, room, chat room, whatever. It's completely free. But I will say that Tom never trades live, and he doesn't call trades. There's a good crew of excuse me. There's a good crew of people in there, some of whom are here, and also in Static. And I just feel a sense of obligation because I enjoyed the time that I was more active there, because I started this stream, which in my journal actually it was a suggestion that Tom made to people, because he's always saying how important it is for everybody to narrate the day, narrate the session, and that's why I started doing this. So I'm going to focus here rather than be snapping and, like I said, snapping and popping, somewhere else. But I feel that I want to contribute there every day. So that's what I do. It's called the Traders Lab by Tom B. I don't recommend any other of the sites on Bookmap because I haven't been to them. The only other two that I have been to were normal. The guy was trying to sell you something, this, third word out of their mouth. And the thing about the TLab is you will never be solicited for anything. So that's a big plus. All right. We're set up. I'm pretty much on schedule. That's a miracle. I'll be glad when this fella gets this thing fixed. Son of a bitch, it's a pain. Here was yesterday. Here was Friday. Thank you so much. What an opportunity for all of his friends, anyone that had advanced knowledge of that, huh? Suppose that happened? I can't imagine. Can't imagine. And we're down on both of them, eh? NQ down here and the ES up here. I also track the minis if that matters to anybody. Same configuration. And as soon as we open, I'll change the charting to RTH session only rather than full session to keep the few of the session prices aligned. Primarily the value area and the previous value area and the developing value areas. Need to keep those aligned that way. All right, so what do we expect we're going to do? Well, we are let's look at the inventory here. The inventory is essentially 100% short. There was this little burp in the little spike up and then down they went. And we're opening lower out of range in a gap down situation. What would I expect? A little bit of responsive buying to take profit. And then in this environment, I'm sort of thinking they're going to continue to sell this down. So on the open, remember that we're in gap rules. Yeah. We got 5 minutes. It's water bottle time here, ladies and gentlemen. Okay. Okie dokie. Well, so we got about 3 minutes. Fingers crossed. We're going to get the. We're going to get our reset properly here. That seems to be working now again. Sometimes a little early, sometimes not. I have my computer set up. There's a way you can do it. This, by the way, is rhythmic data. Market by order data. And there's also a setting you can do if you choose where rhythmic will reset your computer clock to match its server time every 2 minutes. That has to be, you have to run rhythmic as administrator though to do that. FYI. Okay. Gap rules, huh? Now what I'm going to do is I'm going to go to our previous close right there. And that's going to be the gap high. And there we go. We're open. So there's our gap high, and here's our gap low. Well, there, you know, wherever they post the open, which is going to be right about here somewhere. I'll slap it in there now, and I can move it wherever when I get the open flag. And we can start flagging the POC. We notice that the overnight volume point of control jogged down here just at the open, but so what? Remember that a lot of these numbers are this is live, right? So it's not set and forget on some of them, like the more volatile ones, like the perfect example, the overnight volume point of control. Well, here we go. ID-ho. And you see how the IB high and low moved? Now I'd be going, what the hell was this? So there you go. There you have it. Okay. I'm going to do this to go away, Bookmap. Jesus Christ, grow up. I am going to set Blue Boy. This is very expensive, super secret, ultra valuable. It's a vertical line. It's about how crazy some of the internet people are, the rearview mirror guys especially. This is, once again, I mentioned this in the pre-market. This is just a vertical line that I throw at the session open. And that is a visual clue for me. I can glance to the left, and if I see this blue boy over there, I know I have the entire session in view. If I don't, I better do something about that. Now, let's see what we've got. So here's our open. Oh, I was pretty close, huh? Look at there. There's a tick off. There you go. There's the open. That's the gap low. Now, what do the gap rules say? It's an old market profile-ism, kind of, but surprising how often those things are real applicable. And let me try to do two things at once. I'm going to change the session or the charting to the RTH session while we're at it. We've got a little bit of a lag over here in milliseconds. And let's change this to, there you go. And we'll save that. Gap rules. Basically goes like this. If we close the gap relatively early in the session, and if price is accepted in the previous range, or more importantly, in the previous value area, then we have a very high probability we will trade all the way across that value area. In this case, to the value area low or high. Again, if we are accepted relatively soon, relatively early in the session, and let's try to wind this session out a little bit. Here we are, and here's our gap high. Well, the close is way up here, but oh, I didn't do that right, I don't think. No, I didn't. I'm sorry about that. The previous RTH low is what I was looking for. I'm asleep at the freaking wheel here. Sorry about that. Not the close. Wherever the close went. but the previous low is what I'm looking for. I'm asleep at the switch. I was thinking about explaining that some people use the close. I use the range. So there's the gap high and there's the gap low. There you go. What did I just say about the gap rules now? Okay, now that I'm back to the normal kind of. We have the gap rules say that if we close the range relatively early in the session and are accepted in that price range, we have a good chance of trading all the way across the range. If we don't, the probability is, guess what? We're going to continue in the direction of the gap, and that's what we're doing right now. You know, granted, we're only in the market 5 minutes, but it's could be, at this point, it's a gap and go. Who knows? Good morning to whomever. Smack a thumbs up and a sub and drop something in the chat. Where are you? Who are you? Is this ridiculous? What's what, you know? Elon Musk start donating $1 million here, but you know, so far he's not answering my email. And here's our gap. This is kind of interesting situation here. Thank you, Friday. Since nothing is really exciting at this moment. Typically in the market micro composite, let's just assume that Friday was a sell-off like this, not this 227 points. This gap low to yesterday, or gap down here to yesterday, would have been the start of a new micro composite, as would this. But because I'm going to have to think about this, because as I say in the pre-market, wherever price overlaps, I draw the volume profile around it. Well, we're going to keep overlapping this son of a bitch for a long time, right? That's something to think about. And this is the POC for the micro composite so far up here at 90. And we're migrating our POC lower. Remember, the POC is nothing more complicated than the price at which the most contracts have traded. What am I doing? I need to finish my coffee, wake up, take a walk, whatever. This is just the price at which the most contracts have traded so far in the session, meaning that right here we've traded 2,257 contracts at whatever that price is, 09.5. The very split second that this price up here is 25.42, POC will jump back up there. Very simple. Nothing magical, mysterious. Of course, you need to be, you know, I control all this with my wizard hat and my magic wand, but, you know, you guys can't. Hey, Antonio. I'm delirious. Morning, gap down. Interesting day yesterday. I hope everything worked out well in your behalf. MCVPOC migrations here as usual. Trying to shake the trees here. I'm not sure what to think about the micro composite. I was just thinking about that. Friday. Thank you so much. Orange one. yesterday and now today. Well, if it were not for that dramatic 227 handle drop, the micro composite would have ended up here, and these would be, I'd be looking for new overlapping to start the new volume or micro composite volume area. I don't remember ever having this kind of a situation before, so I'm going to have to give that a little thought. And again, this is just whatever makes sense to you. None of this is written in stone. None of this is, anywhere in the Bible or the Quran or the Bhagavad Gita or whatever text you believe is the most important one. So, it's what makes sense to you. Remember, this is your trading business, and it has to resonate with you first. Started putting this blue line here at the session open. I don't know how long I've been doing that, but it's nothing different than just the blue vertical line. And it's a visual cue for me. I can glance to the left and be sure that I see that line, meaning that I have the entire session in view, so I have a firm grip on context or firm understanding or conception of context at all times. It kind of gets rid of, well, there's our overnight, or there's our previous RTH1 which we've just taken out. And I didn't put that over here where I should have. Bad little pig. This is called anal, obsessive compulsive. Now I have to do this. And this was the 13th, 1025. And since it's already been, when a level's been revisited, I've changed the text color to black. There we go. And now I can remove this one over here. And I can put in Antonio's favorite flags. What I was getting ready to say here is that since I've been doing this full session in view at all times, the VPOC flags aren't nearly as important, because the way it used to work was I kept the time zone or the time scale down here at 5 minutes. So, well, okay, 5 minutes is fine. Now we've only been open a couple. We've only been open 10, 15 minutes. But as the day progresses, the migration of this line, or our POC, would scroll off to the left. So I use these flags to keep myself oriented. My thinking is that I want to have all the data necessary to trade right here on the hard right edge. That's the reason I have it set like I have it set. That's my story, and I'm sticking to it. Boy, they're selling this sumbitch off, and they didn't even remotely think about looking back. Lots of folks have a disappointed look on their face, I would suppose. So what have I done here? Where volume is way high, or it was, still is. What is this now? Still is way high. I'm guessing about $1.40. Hello, wake up. Is anybody home? IRT? Oh, Jesus, almost 200%. Oh, I know why. I've still got this on the, I didn't change this one. I could leave it on full session, actually, because it's related to the time of day. But let's see the difference. We had 191 yen. Now we've got 112% average volume in this RTH session, so no look back. And our ATR has jumped up quickly to 5.5. Okay. There you go. Well, a 40 handle range on the IB in the first 15 minutes. That's a little volatility we're having here today, boys and girls. Remember, we've got Fed Chair Powell up at 11:20. What a weird time of day, but there you go. And don't forget that we have a rate meeting and a bunch of crap this month. Now, if the children in D.C. can get their act together, that will be interesting. Okay. I've got all my charts on our RTH session. I've got the Blue Boy on duty. Oh, I hope I haven't been talking to a mute thing for a while. That's kind of disappointing. If I have, sorry. I'm going to move my thing here. Move the mixer because the mute button gets covered by one of the volume controls. Plus, I'm stupid. I'm not exactly Mr. DJ. Well, we're getting quite a bit of movement here. We've got Mr. Blue Boy ticking off there. Now let's see if we can get our scale kind of right. Not yet. Boy, I wish I could just set this damn thing like that. I try to have 1 point on the price scale, and as I said, Blue Boy on duty over here, so that I always have a firm grip on context, and this gives me a sense of scale. Bookmap can be accurate, can be your friend, or in my opinion, can kind of be your nemesis, because you can get zoomed in so close you have no freaking clue which end is up, whether you're even foot or horseback. So, or at least me. You can get into microseconds if you want to, and I can't imagine that would be helpful. And I'm sure there are folks who trade like that. All right, so now, well, not now, but in a minute now. Self all set up here. Remember that we're in a gap rules situation. The open is our gap low. And 82.8 was our overnight volume point of control. See there? The line, this is an indicator, which you buy from Bookmap. I did anyway. And it will display more than one flag title at a time. And these are the cloud note columns, or the flags. The important thing to understand about my Bookmap here, if you're watching this, is that both of these, the indicator line and the cloud notes, are driven by the exact same data from IRT pushed every 30 seconds. And I keep this export flag up here so I make sure it's still working. This is what's pushing the session prices to both. The reason sometimes you'll see the line appear, they're not synchronized, that's because that's a known thing and it's not a bug. The least refresh time I'm able to set on the IRT cloud in the Bookmap cloud column is 1 minute. And whoever the boys and girls were that coded up these line indicator, obviously were able to do it what they wanted. And I looks about 30 seconds to me. So sometimes this line will jump up, and then in 30 seconds or so later, the flag will follow. But they're both pushed instantaneously, and I can always, as you might imagine, I can always just look left at these two monitors. This monitor and this monitor are the two lower monitors on my 4-monitor rack right in front of me here. So, you know, I'm seeing the big picture. I thought about sharing or streaming both of these together, but they are 32-inch 4Ks. And I'm pretty sure if I did that, nobody would be able to see it. I might experiment with that one day over the weekend. That'd save me slopping back and forth, changing monitors all the freaking time. But, and then on the other hand, sometimes I want to look at something on one monitor and not disrupt the stream, and I can do that. So I probably will never do that. And I'm sure the, you know, having 64 inches wide of 4K stream would be pretty hard for anybody and for the stream itself to represent accurately. One other thing, the stream is in 1440p, so high def. If it's not crystal clear on your side, smack that the gear icon on YouTube and select high def. Well, what are we doing now? One of the things I wanted to point out here, and I'm a little bit late in doing so, is since we have no news reports really coming out, I already mentioned that. We do have earnings. We're in earnings season again. Oh, joy of joys. Something that we have to be really cautious of in this particular environment. And this is no statement of, not any way a political statement, but it is a fact. We're in a real heightened possibility of critical, unrecognized critical risk at any time during the day. And if you don't believe that, go back and look at the chart of Friday and look at 10 o'clock in the morning. Now, that was one tweet, or well, actually, it was a couple of tweets by the president, by Trump, on Truth Social, which I guess I don't know who all subscribes to that, but I must be a lot of people, I guess. Unsubstantiated, no corroborating evidence, or there's a copy of the letter, or any kind of supporting news reporting from anywhere else. And the market sold off 227 handles. Now, that is unplanned critical risk. Not saying anything wrong with that. What I'm saying is your job as a trader is to, your first priority as a trader is to protect your account. You've got to be able to trade tomorrow. And as a manager, a business manager of your trading business, one of the first things you've got to do, as any manager or project manager does, is identify any risks that might happen or affect your business. You identify that risk, and then you make a risk management plan or risk mitigation plan. That's what they call it in project management world. Well, the worst or the most dangerous risk that you can have for your business is one you can't recognize, the one that you don't know about. Friday, good example. Out of no place, 10 o'clock in the morning, kaboom. So it's not any kind of a political statement, but it is a statement of very serious fact. Mind your risk. In this environment with this current administration and the few folks that are very fond of cameras and microphones, limit your risk to A+ setups only, in my opinion. You want to limit the time you put your account at risk in the market. And so you want to maximize the potential benefit of that time. I think that's really important to understand and to do. You know, days gone by, you know, the scalping days and the sows bandits and all that crap, that's all out the window, especially now. You know, those days like Friday would be considered black swans, or, you know, like the famous Monday or whatever, where can't remember the dates because I don't remember yesterday, but those kinds of movements were historical. Everybody remembers the world famous, you know, foam board Rose Garden tariff story when we showed those pesky penguins who's boss. And this past Friday was another example of that. So we need to be real. As a trader, my suggestion is to be very cautious of your risk. Never have a order in the market where you haven't fully bracketed it. Yeah, a stop. Remember that a stop order or a stop loss changes to a market order when price gets there. Now, by definition, a market order says you're going to get filled at the best available price or something like that. So, you know, when it's a big move like it was on that Friday last week, you might get run over and you might have, you know, 10 points of slippage. That's nothing you can do about that. But if you don't have a stop in at all, you're in big trouble. And similarly with profit targets, in my opinion. So remember, this is my journal and I'm basically talking to myself. So that's my story and I'm sticking to it. All right. 22 degrees over here. That's about 70 for all you effers over there. Let's see what's going on in backtest world here. Oh, there, I was doing some backtest stuff last night. Get rid of those and that. Come on, and that. And we'll maximize this. This is the backtest. This is a risk, the IB rules, trading system rules, and this is the chart. Now, this chart has nothing. You notice that there's nothing here. Where did everybody go? What did we do? We opened gap low, right? There we are. This chart is completely separate from the trading system, but these custom indicators that I've put on here and these signal markers are exactly accurately represent those levels in the trading system. And this is for me to visually understand what the hell is going on. In other words, are these things firing where I think they should and stuff like that? That's how it works. That's the point. That's the point. And this is only applicable to the IB trades, which I have vetted and am now working on. And then I'll move on to the next group or the next setup. I'm trying to approach this as a trading business based on probabilities and statistics, and, you know, the best way I know how. And look at us go. Oh, baby, we're in the gap. Ooh, are we going to close that gap? What's going to happen now? He's all excited over here. There we go. pushing that IB up at the first hour. Now remember, what's the definition of the initial balance and its associated statistic? There is no such thing as an initial balance statistic until after 9:30, because the definition of the initial balance is the high and low of the first 1 hour of the session. Now you see the flag is up and the line hasn't caught up. Somehow they stagger around, I don't know. Pretty quick, this little green line is going to jump up here and then everybody's going to be happy. And there are no signals firing over here. There are no lines plotting, and that's because it's not 9:30 yet. I mean, you knew that, right? And here we are. Uh-oh, where's Blue Boy? Hiding. There we go. Are we going to close the gap? Who knows? Well, my eyes are struggling lately. I don't know why. I guess spending too much time here, I guess. Okie dokie. So here's our gap low. And here we are. Ooh. Remember the gap rules. The volume is way up. Wow. That's amazing. Let's look over here. 124% for this time of day. Big selling tail down here. Continuing the overnight, I guess. We're not quite a percent down yet. Whether we will or not, who the hell knows? Oh, this guy. Yeah. Okay. Now, because I am only working on the initial balance trades, my job in the morning is to just watch, anticipate, narrate, be in touch with the market. What are we doing? I'm not whipping and spurring. I'm not clicking and banging, you know. I'm not trying to kill snakes over here. I'm just watching and stalking. If you've ever hunted or anything, you know what I mean. And I don't mean stalking in the sense of your ex-girlfriend. I mean game or taking pictures or hunting or whatever. If you have a vetted trade that's a mean reversion, wow, huh? That's a lovely deal there, and all the way across from, you know, outside in. Yesterday was a similar case. Yesterday we had several mean reversion trades. I initially chose the IB trades to vet because there are two. there's the IB continuation, and there's the IB failure, which gives me a vetted setup, which, will produce for me a vetted setup in both day configurations, directional or rotational. That made sense. I don't know, hasn't proved out yet, but here we go. Here we are. The idea about this whole vetting process and all of this is to establish the existence or not of a valid expectancy, edge, probability, whatever word you want to use for it, for any particular setup, and the specific criteria that validates the entry for that setup. That's how I believe you establish the bullets for your trade, the options, the plays for your playbook, pick an analogy, sports, hunting, whatever. And you don't just randomly take trades, you don't just click bang on a hunch, on a whim, on a whatever. I don't. Let me rephrase that. I'm sure there's an awful lot of traders who do. And if they have consistent, if you, let me just say right up front quickly, this stream is my virtual trading journal. I'm talking to myself, how I get what I was thinking into the recording. Okay? And the record. Reconnected, I guess. Yeah. Whatever you do, don't quit doing that. This is what I'm doing. And I'm happy to share anything. If you need a copy of my IRT, if you have IRT and want the definition for these charts, or my book, my backtesting chart or whatever, just whistle, no problem. If you'd like, if these session prices would be helpful, I share them with a lot of people and have for a long time freely, no problem. Drop something, subscribe, like, drop something in the chat, and I'll hook you up. These are pushed every day, or from Sunday night at 1700, 24 hours through Friday night at 1600. I push them to, now obviously on my charts here, they're internal, but I push a copy of this to Google, and then I Google Drive or whatever, and I share a link, and then that link you can put in wherever, Cloud Notes or whatever program, your program of choice, or this indicator over here, and you get it comes out down as a CSV file formatted with these colors and things, and there you go. No problem. Happy to do that. My thinking about, all of this, sharing all these things is as follows. There are millions of people trading every day. Millions. That's why we have a random environment. Can you imagine 1 million people, millions of people doing anything the same? Of course not. And taking that further, I don't think that if I share my setup, describe it, and it works, and how many people, was it 50 or 60 people or 56 subscribers or whatever here and listening to me, and who knows what? I don't suppose that 50 of us are going to ruin the edge. First of all, I don't imagine that even a small percentage of us here that listen to this would trade them the same as I do. And even if they did, how could that possibly ruin the edge? I think all of that is just internet guru mumbo jumbo trying to sell you something. So that's where I'm at. That's where I'm coming from. That's why I have no problem sharing it. You'll notice that I share the monitor on the stream, not just the application. So you can see the hours, minutes, and seconds, the date, any program that I have open. My bigger focus here is that there is no question about the transparency and full accountability for what this is about. I mean, think about it. After all, who am I trying to bullshit? Me? Come on. Come on now. But I do believe it's very important to share everything, be fully transparent and fully accountable. There will be no trades taken off this stream live. None of this, oh, I took that, oh, rear view mirror analysis, any of that, because I just, that doesn't wash real well with me. That leaves out a component for me that I think is important. Yes, I'm OCD. There we go. They're going to get around here and close the gap if they're not careful. Ooh. One thing that I have noticed that is, you can figure this out you can capture these statistics somehow yourself. It's amazing how frequently the old adages or, statistics from the old market profile days, how frequent, like gap rules or the statistics for the IBs or, stuff like that, how frequently they work out. It's pretty amazing. And that was done long before there was book maps and all this fancy stuff, right? And those things were recognized by traders long ago. And it makes sense that they work. I mean, it's like, if something happens once, who the hell's going to notice it? If something happens every few days, enough people watch that, they're going to go, hey, you notice that? Yeah, I did. So here we are on a little different scale, perhaps, but there's our gap low, and here we are. Over here on the micro composite, the Renko, and this is our old buddy, the NQ, the snake. I used to trade that NQ only, but it got so. I guess I got into just working the ES with Tom over at the TLab. Being on the same page makes sense to me, helps me, shall we say. What's happening in backtest world? Whoa. Hey, where'd all those signals go? Well, there's no signals to be had yet. It's not 9:30. Once it is 9:30, these levels will start plotting. And then we have the possibility of signals. By the way, anyone that doesn't have IRT and that would be interested, these signals, these levels are just real straightforward. They're based on, I built them based on Rod's IBF, which he posted in Static specifically, the levels. And then I just flipped it on its head for the continuation trades. So you can you can create these indicators of these lines anywhere, Trading View or whatever else you want to do. Real simple. Just let me know and I'll be happy to, I'm happy to describe what they are. I mean, to just, put it out there. No problem. So here we go. And as I said, if you're listening to this and you use IRT, happy to share the chart description, which is how you do it with IRT. You just, I share it, and then all you have to do is just drop it onto your IRT chart, and boom, it miraculously appears right in front of you. It's pretty cool. Pretty slick way they have to do that. Very well thought out program. I'm so sorry Chad's not there anymore. Eddie's picking up the ball, or trying to. Bill Lind is the guy who originally started it. He's pretty much retired. I believe he's given it over to his daughter or something. But Chad Payne was the lead developer, and he's the voice you hear on almost all of the videos and stuff, and was a hell of a nice guy. Was fortunate enough to be to the point that he would come, like, if in this chat room, if I had enough, viewers here that were all trading with IRT, and it didn't take many, 15 or something like that, that were using IRT, he'd come into the chat room every day and answer questions and point out stuff, or on the live. It was a really interesting, those were that was a long time ago. Of course, that was back in 2014, 2015. Okay, we're narrowing down on the IB. And what is the IB? Well, let me just say that it is, boy, my eyes are stuck today. I don't know why, but it's hard for me to even focus over here on these other screens. That's good enough. So what is the IB? Well, the IB stat, which has not happened yet and will not happen until, it will not be an active thing until 9:30. But it is the following. There is greater than a 97 point, let me look, 97.5% probability in all four open types that the IB high or the IB low will be revisited by price at some point in the balance of the RTH trading session. In other words, between 9:30 and 1600. 97.6% of a data set looking back over 2,000 trading days, and a subset of 291 days where we opened lower outer range, sorry. And if you think I'm lying, here you go. IB high or low, higher, low, higher, low, higher, low. Here we are today. IRT conveniently highlights the correct open type in case you're stumbling around with that, but you have IRT. But how can you possibly miss it? It's two parameters. 97.6% of the time in this configuration. Now, it's important. There's a couple of things that are pretty important. Fix this. Boy, this chapter thing screws with me. All right. 5 minutes. And boy, oh boy, what have we done, boys and girls? Well, good little campers. We've almost closed the gap. Isn't that cute? There you are. There's the gap low. There's a gap. There's a gap low. There's a gap high. And here we are. So we're, half a dozen handles away. If you're a mean reverter kind of a guy and you took that low over there, boy, oh boy, aren't you proud of yourself? And should be. we can actually look at that. There is a statistic for that. I'll shut up here and let the chart play out as we get up to this gap. But there's a statistic for that in every open type. If you stop and think about it. Now, if you use the range as I do, if you define the gap or the range as I do by the previous low and the open, right? That's how I define the range. There's a 66.7% probability or 194 days out of a 291 day data set where we opened lower out of range that the previous low was revisited. 66.7% of those days we closed the gap. Statistics, simple. 291 days we opened lower out of range in a data set of 2,000 days. The previous RTH low was revisited 66.7%. That right there is closing the gap, boys and girls. So there you go. And bam. Just and 3 minutes to go for the IB. Isn't that cute? Come on, one more tick, boys and girls. You got it in you. Push. There we go. Come on. Come on. Notice how the line for the IB and the flag are out of sync now. That's that refresh deal. And I'll be honest with you, I haven't looked back at the book or the cloud node column in, I don't know, forever. Maybe they changed it on, and now I can set them equally. I don't know. Be honest, I don't care. Obviously, when I first saw this, I thought, whoa, what is this bug here? And then I realized what the deal was, and so it doesn't matter anymore. And why that went away, it's because it's right underneath there. There you go, I guess. Now our flag is up here, right? Because that's where we've traded up to. And there's the flag, and there's the line. So we have essentially closed the gap. It is, we've got about a minute and a half to go for the IB statistic to be active. And let me say something really important here in a minute. Remember, I'm talking to myself. I believe that our subconscious mind, listens to and believes what we tell it, and that it has a lot of power. It can manifest things. I actually believe that. I'm not crazy. I'm not joking. So that's the reason I articulate a lot of this. Number one. Number two, it's the only way I can get what I'm thinking about into the recording here or the stream. Be right back. Okay, the IB statistic is now a thing. You'll notice how the levels miraculously appeared here. This is the continuation zone and the pullback zone for my backtesting chart. But let me say something now. That I believe is really important. The statistic is active, yes, because it's now past 9:30. Absolutely do not try to anticipate and trade to the statistic. Oh man, we're way up here at the top. We're above the VWAPs. We're above the POCs. I just know we're going to take the IB high. And you get long. Oh, wait a minute. And now you just got stopped. You see my point? It's not, and I'm sharing that absolutely. I am sharing that absolutely the voice of experience talking. After the statistic has been set and taken, in other words, price has taken out the IB high or low, now you have the opportunity for a trade to set up. And let's look at the backtesting story over here. Okay, here we go. There are the rules. And there are the lines starting to plot. Now, let me say something here. These levels or these session signal markers, I'm not going to bother trying to code up the sequence of these as they are in the backtest rules. These will fire whenever that specific criteria is met. I know that it has to be sequential. There's got to be an A. That's the IB statistic. Then there's got to be a B. That's the pullback, the pullback or the continuation zone. Then there's got to be a trigger. So, okay. So there we go. And the way these work, the trigger is an arrow. If it's an arrow down here, it's a short. If it's an arrow up there, it's a long. And the arrows are right at the bottom or the top of the bar. And the signal marker, the A or B, stands off because I didn't have that configured like that a few days ago, and I didn't pick up on a B. I thought it was a trigger, and I didn't take the trade, and it was a fantastic IB continuation trade. And yes, I was pissed. I even went back to the stream immediately after the close to confirm that I had missed I thought in my memory that the signal had not fired, and very quite clearly it had when I reviewed the stream. But my narration was, no, we don't have a B signal yet, so I'm standing down, I'm standing by. Yeah. Big eyesight issues and, there you go. I don't know why I keep doing that. Try to get this as wound up as good as I can here, so I can really see what the hell is going on. Try to eliminate that problem. The thing I have to be careful about is that I don't, that I'm always updating. You notice the continuation range IB high, continuation range IB high low. That represents these two levels, and the same for the pullback down here. Now those and these and down below us here are represented, are pushed to Bookmap, and there they are. So there you have it. And we have not taken that IB statistic. Remember, what did I say about don't trade to the statistic? Ooh, I'm not sure, but I'm relatively certainly won't be surprised if we take the IB stat any minute now, but we have not yet. There we go. Now we got it. Now we possibly have an A. Oh, yeah, we do. There's the A. And now we can have one of two things, B or a B. A B, we don't have a lower A. Yeah, we do have the lower A, okay. So there is our IB statistic. 97 point whatever it was % of the days has just been satisfied. And here's where the blue boy and my context is coming in. And this is something I've been trying to deal with here now, the last couple of trading days. As I said, the backtest chart is just visual confirmation, as are these lines over here. So nothing's automatically being entered. However, twice now in the last handful of days, I have not taken a signal, a trigger, because it went against context. So I'm now thinking about how to include a context filter. I think it's very important not to trade counter context. What is our context? Well, looks to me like it's up. Just guessing. So that would suggest to me that an IB continuation higher would be the trade to look for, rather than an IB failure. That's just based on the price action. Now, if you think about it logically, once we close the gap, well, we can either be accepted in there or rejected out of there by the gap rules, and then that would mean we trade the other way. But that's I'm just thinking out loud here. Remember. So there's our A in both cases. Now we have the opportunity for either an IB continuation B signal or an IB failure B signal. Obviously, the IB stat is the IB stat, so you get an A on the other side of them. I mean, come on. I'm sure that's obvious. Now, let's be sure about this. You see, we got a trigger here. Well, no, we didn't. Yes, we did get a trigger signal, but it is invalid because there's no B yet. B over here, but there was no A. So they have to be, the signals must be sequential, A, B, trigger. I hope that. Wow, and the only, unless we get some random risk, which is, you know, extremely likely, I don't know what to tell you. I don't know where the random risk band is. They were in Israel. I don't know whether they still are or not. I don't even know who they is. I know Trump was over there. I don't know who was with him. Probably Rubio, I guess, and then, you know, all the little support minions, which is perfectly understandable. Normal. So I'm going to do a confirmation checklist here. I've got the bracket on. There's a continuation. Now we got a B. We got a B. Oh, we didn't. It was and it went. It was and it went. Let's watch over here. And remember, these letters or these signals are firing based on the rules I've written for the trading system. And that's just, you know, my best thought, my best guess to get to establish a base point for backtesting. And that then now, you know, away from the live market, I will optimize. And then I've gone through all of this, and I will later today again. But we don't have a B yet. You see, we got a doji guy over here that didn't give us a B. We need a close to be in the pullback zone. That's the way the rule is written. Just up, you know, just winging it over here, boys and girls, to say the least. I don't even want to, oh yeah, random risk. I don't know. So who knows what may come in the form of some tweet or another. Usually if, you know, like I maybe he does tweet from the Air Force One. I don't. Typically, I think we kind of get a break in the action when they're moving somewhere. Now you see we have this signal trigger, but it's not valid because we don't have a B right there. Could have been, was for a second when the close was up here, but then they came down to a doji. So that's not a valid signal for me to take as a continuation trader, the long. What I was getting ready to say was that I will now, the whole workflow at this point is that I have Blue Boy here so I can see the context. When I want to anticipate a trade, I can zoom in. Furthermore, I can confirm I've got a 2-lot package. I've got both set up. I've got the multi-trade thingamajiggy up, and I've got the correct package set for the risk neutral trade. So there we go. I'm ready to trade, and everything is as I expect it to be. assuming I get the signal and the trigger, I'll take trade. That's the only way I know to do it. You can certainly have a lot of success with a shorter data set, with a shorter sample set, where you happen to get within random risk and you're just getting along or scalping or whatever, and sounds great. But now we get a B. Okay. Now we have an A, and now we have a B so far. Now we don't have a B anymore. Again. And maybe I need to change that rule. Maybe rather than the close, it's the high. This is a starting point from which I backtest, and then I can optimize and then forward test. It's a process that I'll describe fully later today when I perhaps will not be actually trading. And just getting that T, I'm thinking, well, a criteria that could be considered would be a gap, That would be something interesting. Now we have a B, and the B has been set. Am I on the right? Yeah. B's been set. We need the B trigger. And here I go with my discretionary thinking again. An IB failure trade would be counter trend, in my opinion, or counter context, in my opinion, for the day, I think, wouldn't it? We had a pull back, we looked lower, and now we're way up here. We've traded all the way across and closed the gap. Because we're going to get a signal here in a second. There is a short signal right there for the IB failure. Now, if I'm a good boy, I would put a short right here and look for the see what happens. But for me, that looks like a real bad probability because of the context. I don't know what to do, frankly. I don't know what to think about it. I don't know what to think about that. Well, I know one thing. I'm glad I didn't do that yet, because it would have been a disappointing turn of events right there. Boy, my eyes are screwed up. I can barely focus on the screen here. Blinking and carrying on. I don't know. I'm at a loss, absolutely. I have a signal to go short right here. But looking at this context discretionarily, I'm thinking no. I don't know what to say. That's a problem. There's no excess at the top here of this auction. We do have at the bottom. We're back in the range. And oh, we just got a VPOC migration up. So Antonio just went all in. Maybe not. Oh yeah. Well, there we go. Now there's a new wrinkle. And that can be then another, these are things I need to think about. Does that further, well, I guess I'm not too upset about the fact that I didn't take that IB failure, except it'll probably go down there now that we had the IB migrate up. I'm sure we'll have a sell-off. That's usually what happens. I still do not have an IB continuation trade signal. I have an IB failure signal. I did have. Wait a minute, something's goofy here. There was very definitely an IB failure signal right because I talked about it and it's here in the stream. Where is it now? Hey, Panda. Hey. You want to say good morning? Practice your Portuguese. You want to say good morning? Okay, good girl. Good girl. Well, All right, now we've got another B signal trigger. This is turning into a cluster over here. Well, we did have right there. We do. little bit late, but I'm really conflicted about this context story. I have a real definite prejudice, or whatever you want to call it, about, or, self-imposed rule set about not trading up, about not taking counter context trades. And I don't know what to do. I don't have any A signals yet. We've had 2 or 3 B signals. 2 or 3 counter trend or failure signals. And here's another one. There was one right there. And I don't know what to say. It should be pretty clear, I guess. Well, one thing I don't have a problem with is standing by. Thank God. Thank God in Greyhound. One thing I will say here is to keep an eye on, or at least this is my experience. Hey, Panda. What? I didn't do everything I was supposed to do. Yeah? What? You giving me the kitty cat stare, the Vulcan mind kitty? Yeah. I know you want combing and petting, and I can't be doing that. Yeah. I can't stop here combing. Okay, what happened? Well, 3 short signals in a row for the IB failure. And I'm not doing it. Sorry. I mean, we're not exactly ripping to the top of the top of the charts either, are we? But big flat top, no excess, or maybe a tick. They're not being extremely. Doesn't look like yesterday's got the welcome wagon out or the welcome mat out for these boys and girls to get back in there. We are in the range, but we're not exactly being accepted. Now we're going to get a B signal up here, I suppose. Yeah, there's a B firing. Whether it sticks or not, it's another question. No. I don't know how the hell I would, how would I define and code context like that? Wow. Maybe a moving average, you know? I hate the thought of putting a moving average on or some indicator on my chart, but actually a moving average is one definite way of identifying a trend is in the direction, right? Is maintaining. If it's above the whatever, I don't know enough about it, even make a suggestion. So now if you are taking the IB migration or the VPOC migration, and you took the pullback down here to this support range where we'd already been a couple of times and got long, that's looks like a pretty snappy idea. And here's a B. My problem now will be I need to have that B pull back to the trigger zone. And we may have gotten through, we may have gone past that now, which is unfortunate. And that looks like what we're doing. So, bummer. And I want to point out once again, this is just what I've come up with based on suggestions from Rod, who's a very successful trader, as a place to start. I had to be able to code this up so that I had visual rules I could rely on and code rules that I could rely on and go from there, you know. Nobody said this was set in stone or the Holy Grail or anything else. Disappointing though. I'd like to knock a positive trade in the head or two here and get this stupid thing, all these accounts into the XFA and forget about it. I don't know if I mentioned all of that story about the trade copier and all of that during the pre-market. What do we got going on now? Where are we for time? 2:05. Well, son of a gun, look at her go. I hope you got on that VPOC migration, anyone, Antonio, and are reaping the benefits there. That's now we're getting into that. Now the gap rules are starting to pay, right? It is. Apparently, we were finally accepted within range, and we're getting some headway. We haven't gotten back to the value area yet, but it's just above us there. The value area is at 66.80. Damn it, Janet. So what could have happened here? How would I identify programmatically context? It's really amazing when you start doing this kind of thing, or it's amazing to me. Boy, we take our brain, our decision-making capabilities, and, for a really take them for granted. When you start trying to tell a computer what is so simple to you, it's amazing to me. And you might be able to tell I'm not a proficient coder as Rod or some of the folks there. Damn it. So let's look at this. Now, let me, I think I answered my own question, and I was I was too focused on the moment than the big picture. There are two IB trades which I have described ad nauseum here. There's the IB continuation trade, and there's the IB failure. The IB failure trade is a fancy, another way of saying mean reversion based around the IB as a trigger or as a statistic setup. Okay. Now I'm over here commiserating about, boy, I know that I'm getting signals for the IB failure, and I'm going to discretionarily not take them. I'm looking for the long what. Well, I wasn't listening to my own previous rules or the definition of those two trades, which are the IB failure trade is a mean reversion, and it is applicable. I even said this in the pre-market, and it is applicable to a rotational or balanced environment. The IB continuation trade is applicable to a directional day. What do we have here? We have a directional day. I don't need to worry about not taking the IB triggers, failure triggers, because they're not valid in this day type. Now, it'll be real interesting to hear that on the stream and see if I'm completely full of shit or not. I'm just bullshitting myself. No, I'm not, but, BSing myself, whatever. Well, we have another B, but we don't have a trigger here yet. And we are not. What have we done? We haven't gotten up to value yet. Context is pretty certainly up, and it's pretty much a directional day. So Will we get up here and pull back down and do some testing? Well, yeah, we could. We could turn around and go the other way. And that's, you know, the market is random. And the outcome of the next trade is 50-50. It is essentially a binary event, a coin flip. In the previous data, you know, that famous saying that nobody pays attention to, past performance is not indicative of future results. That's a statistical fact. No trigger. Well, what are we going to do now? This is a dangerous area because there's going to be a trigger here pretty quick. I think like right about now. And it's a dangerous spot because of where we are in the game. And there is a trigger so far, right?
Order submitted. Order submitted.
The only way I know to test this out and see if the damn stuff is actually working is to do it. You know, I'm not real crazy about this price action right now, but we're going to be in a trade here pretty quick, and there we are.
Order submitted.
Now.
Order submitted.
Order
submitted.
So where did I go here? There was all 5 of them firing. And trade 1 at 02:15.
Order submitted.
Oh, okay. And that's an IB long. Oh, look at there. Test up there twice and don't take out the scale. Can you imagine that? And looks to be just about pretty much to the tick. Boy, if that isn't irritating. To the tick a couple of times, I would say. And there we go, risk neutral scale. All 5 of them. That's good. And for some reason, this is not right. Why is the break even not at the stop? Something's goofy here in the state of Denmark. I don't know what. That break even line is incorrect. Huh. That's pretty freaking weird. What I'm going to do though is something I don't ever recommend doing. Let's see, what are we here? We're at 58 and our entry was at 61 half, 51 half. Yeah, I don't know why this break even line isn't correctly at break even. That's got me pretty, but now it's doing something else. Oh, this is horseshit. Something's wrong with the Bookmap here. Something's wrong with the way this is presenting, and it's going to take the stop. So there we go. Now that should be 0 as it is. So there was that's pretty weird. That sucks. That really sucks, boys and girls. Okay, now I got to see something here. I got to make damn sure something has happened correctly. Open orders. 1, 2, 3, 4. That's only 4. What happened to 5? What happened to 5? 1, 2, 3, 4. There's an open order laying out here some frickin' where, and I don't know what's going on with it, but that ain't good. And I don't know exactly what to do, to be absolutely honest about it. Working orders, none. Let's see if I can get to positions here. Damn, boy, this is frustrating. 1, 2, 3, 4, 5. Fills. Close trades. I think it's, boy, I don't know why this thing isn't working right, but I don't want to have a problem like I had the other day with it left 2 open orders. And I want to be sure that's not the case. So there's 1, 2, 3, 4, 5. And there's 5 closed. So I don't think I've got any open orders in work at the moment. And what are these? Completed orders and working orders? No. Okay. That's not good. Why that break-even line? And you see the break-even line is still moving? This thinks I'm still in a trade. Something is all haywire. Yeah, this new Bookmap thing is not working worth a damn. Shit, man. Well, I'm sorry. Son of a gun, man. Oops. And I'm not showing you the right screen. This is not working properly. I mean, okay, I was risk neutral. I was scratched. That's no problem. I don't have a problem with that on 5 accounts. And that's okay. I mean, we can also do this. And there's the volume and there's the P&L and all of that stuff. What's wrong is the break-even line isn't calculating properly, and this thing still thinks I'm in a trade, I think. Let's cancel all. Close any, which there should be none. And there are none, apparently. That sucks, doesn't it? But there was an example of taking the trade specifically. So that, and now we're, off to the rodeo here. If I hadn't taken, look at that. Look at this pullback and the stop taking me out. And now here we go in the direction of the trade. Isn't it funny? And here, instead of entry here, take the entry here on this pullback, and you're thinking you're, fat, dumb, and happy and a big successful trader. I don't have any other signals for that over here. Apart from the signal I took. and the stop I got, and away we go. But I was risk neutral scaled, and so that's working out with the in accordance with the back testing. And this is rearview mirror trading, you know. You just glaze over this part and you say, well, I watched this, you know, break out, retest, break, and down to the here, and I took this long and all that stuff. That's what the rearview mirror kids are up to. And why it's so simple to be deceived into thinking that some, you know, strategy or technique is really great. This is, I took my signal, I'm risk neutral scale, and there you have the benefits. I am pretty disappointed about the break-even line not plotting properly. Completely wrong. What this is doing up here, I got no clue. But we got another IB signal over here, another IB long signal. Do I want to push my luck? I don't think so. Doesn't look to me like they're extremely happy to be long up here. And perhaps a good, well, I don't know what to think. I'm just thinking out loud here. These are the signals. There's the trade. There's the outcome. And now this is for 5 accounts. And oh yes, I don't think I ever finished that. I was going to make sure that I did. Get this properly into the multi-account. I don't think I actually gave the you know, fully explained that. I always get carried away with the setting up everything before the open. This is a Bookmap. No, wait a minute. This this is a Top Step evaluation account. My thinking here is to have a fully transparent, accountable record, 0 to hero. Okay, from the get-go to live. I also, that multi-account thing is there are 4 other evaluation accounts behind it, so that any trade executed or anything done on this one is automatically copied to those others, and you saw them fly up and down over here for the confirmations. That's the point. The idea being that all 5 get into the XFA. You can take payouts for all 5. You can build up your account, which would then carry into the live account. And I was one winning trade away from having all 5. And then now it's come back a little bit. So that's the way it works. I mean, that's life in the fast lane. You're never going to have a string of winners in a row. Well, you will have a string of winners and or a string of losers in a row, because that's random distribution. Oh, yeah, but now we have a short signal. Oh. But, yeah, there's an A and there's a B, and there's a short signal, and there's another one. What do I think? I think not. More than likely, the IB continuation trade is still the trade to take. I didn't take that signal because this folderol here has got me on my back foot. I hope that it's pretty clear this is a work in progress. I'm sticking to my rules. I'm sticking to my backtesting theory, which I'll talk about at length at some point here today. Where the hell are we now? We're at 231, huh? I don't know what to do here. I'm getting only short signals, and that's counter to my rules for the IB trades. So I'm not going to go short. I don't know what else to say. Oh, there's a long. But now, this is ridiculous, right? I believe this is just silliness here. Should I take that long? I don't know. I don't think so. For some reason, I don't have a good feeling about that, and it's probably the long to take. But seems like we're having kind of a consolidation here, a back and a forth, and I missed it. Busy talking and I missed it. Oh, yeah. Yeah, I don't know what to say. I'm trying to, just quickly, this backtest story here, this chart is just a visual representation of the rules I'm using in my trade system, my computerized trading system, and I'm trying to validate that. Now, I just didn't take this signal here, and it would be scaled, and I would be something is wrong here. This thing still thinks there's a contract on. That's why this break-even line is dribbling along over here. Let me see if I can do something about that. Setting. There's a break-even thing or somewhere in there. Break-even point. Well, turn that off. Let's see what happens if I turn that off. And then turn it back on. Still screwed up. Okay, well, I'm sure shit sorry I didn't get long on that signal. Huh? Damn. Too many moving parts and I'm too old. Maybe that's it. Damn it, Janet. This is a really good opportunity to look at that. Man, isn't that frustrating? And you see what would have happened here? Yeah, this is all upside down. This is not plotting anything correctly. It didn't plot the T1. Oh, wait a minute here. This is completely goofy. That's T2. This would have been my... $74. No. Yeah. It would have been my T2 because I'm in at 61, 71, and 2. That would have been T2. That would have been my... God damn it. Why didn't I take this trade? Okay, this is a real good example of the monkey mind. And I'm trying to wait for the time to get there so that I can have my chapters aligned here, but it's hard. So great when I had the automatic tool. Boy, that's frustrating there, boys and girls. Campers. Shall I take it? Shall I take it? And I don't take it. And ooh, there's the full Monty. My. Okay. That's just freaking annoying. I'm trying to figure out what's going on here. It's not showing the first scale, which should be right here. I don't know what happened here, but that's disappointing. And look at there. That would have been a clean, no heat run to the profit target. And then, now whatever's going to happen is going to happen. Isn't that disappointing? Still can't get back into previous value, by the way, in case you noticed that. And I'm not, going to get nuts down here now. And no, I'm not doing that. Okay. What's really important to remember or to keep your eyes on is your monkey mind. And what the hell is that? Well, no matter how you believe humans in this earth and whatever got started, I think everybody agrees that the human, Homo sapien have been developing for a long time. And as a result, our wiring has been developing a long time in our subconscious, in our mind. Basically the monkey mind, right? things that kept us or kept our ancestors alive thousands of years ago were baked into us. That's how the genes were passed down. Those who got eaten or got, ended up something's lunch, they didn't pass on their genes. So we have all these things: FOMO, fear, revenge, desire to be, compulsion to be right for the reinforcement that our decisions were correct. That's all baked into us, and that's never going to go away. If you think you're going to eliminate that, I believe you're wrong. What you must do, and what I try to do, is absolutely recognize those emotions, that adrenaline, whatever it is, and don't act on it. Am I disappointed that this was crazy and I got thrown on tilt because this plotting wasn't right? Yeah. Did I miss a trade right here that I should have taken and went to target? Absolutely. And here's another one. Looks like it's going to happen. But I'm real conscious of not trading and not acting on some adrenaline thing, or, I want to be real sure I'm not looking at revenge or some other thing or regret with trading. And I think that's a really important thing to be aware of. Your monkey mind. And there have been several great opportunities since here. This was probably the worst of them. This was probably the best. And this is all rearview mirror. Right? This is how the internet gurus do it. Well, yeah, I saw us pull up here. We pulled back to the zone. I passed this one till we retested, and up we went, and I made millions of dollars, and there you go. Gosh, I'm disappointed about that, though. I'm more disappointed that this damn thing isn't plotting and working as it's supposed to be, and I don't know what to think about that. I don't really care about the break-even tool. I know where break-even is. What worries me is that the levels aren't plotting properly. I mean, the orders. And look at us go some more. Son of a gun, huh? Isn't that frustrating? Yes, it is. Well. Gap rules in play here. Here we go. There's our value area low. We aren't there yet, but we're getting close. Are we? Oh, yeah. Nope. Yeah, okay. Wow, that's disappointing there. Son of a gun. Look at that. And I should be on it. How disappointing, huh? How disappointing. I don't know what to do about this. Except be very regretful that I didn't, that it happened. And so I'm on tilt trying to figure it out and not continuing to trade properly. There's a signal. There's another one. All of them going past 12 handles from here, from the entry. There's 61.75, and there's whatever that is, 63.75. That's 12 12 points or 48 ticks. Damn it. Yes, Monkey Boy is busy giving me crap at this moment. I can't afford to be just having this continue on. I need to be getting some trades in the book, you know, profitable. And this is the business that I'm undertaking as a career now. So this is important for me to do, as opposed to just, you know, la-di-da, it's a lot of fun. This is not the la-di-da, it's a lot of fun mode. I can't afford to be in that mode. So, yeah. I can't afford to be in la-di-da mode. And now they're talking about trades on 100% trade on China again. These guys go. Well, boy, oh boy, oh boy. There goes, they've now closed the gap and we are inside of previous value. Will we be accepted or will we be rejected? I don't know, but I've had a scratch and I was on tilt, recognized it, didn't trade, questioned myself, and there was the signal. And here's the second one. So it's, hey, dummy, wake up. Didn't happen again. Well, I'm sure happy to see that. Jesus Christ. And this break-even line continues to plot. I don't know what's going on. No clue. I mean, if it if it didn't take them out and I'm up that much, good for me. But I'm pretty sure that's not the case. Now, wait a minute. Do my usual thing here for my snap. Okay, well, that's pretty goofy. I don't keep this sub chart on because I never look at it. My. Weren't these trigger signals great? Isn't hindsight a wonderful tool? I mean, you know, yeah. Now, if I put these signals, if I push the signals from the system to this, it would be taking these and they would be plotting. I'm not sure if there's enough. IRT seems to struggle with memory, and I don't know why. I've got 64 gigs of DDR5 RAM here, but it seems to struggle. I don't quite get that, but you know. There you are. There you have it. Man, that's irritating. That is really irritating. So one scratch trade and then 2 follow-up trades to target, neither of which I took. Because I get kicked over on tilt too easy. The minute I see craziness going on with plotting and things, I get nervous. And I'm still trying to figure out, you know, this is supposed to reset and quit the minute right there, the minute the trade was over. And there's no plot of the first target. So very disappointing. The reason I get tilt easily is what else is not right, you know? And this is sending trade signals and things to the account. So what the hell else isn't working? I mean, obviously you see what's going on over here, but what else isn't working in the background? If this isn't plotting properly, and it's not properly identifying the target, the first T1 target, what else is wrong? And, you know, that cost me 12 points, and God knows what over there. I'm not making an excuse for myself. I'm trying to articulate my thinking and the fact that I'm not, letting monkey boy run away with the game here. Take the mouse and run off with it. Disappointing though, that's for flippin' sure, huh? The trade viewer should plot the trades on this thing that have been taken actually, but it doesn't seem to want to do that. So I don't usually mess with it too much, but that's an interesting issue. Boy, that's frustrating. Well, Rod took a quick sniper entry and got picked off 21 points on a 4-lot. Hey, buddy. What's up, Luck? Why didn't that work? Oh. What am I doing now? Okay, here we go. I guess I don't really need that break-even line. Pretty disappointed that it's not plotting the targets. Anyway, yeah, let's just move past it. Monkey Boy. I'm going to take Monkey Boy for a walk here in about an hour and show him who's boss. I'm now going for about a 3 or 4 mile excursion at the lunch hour instead of nap and stuff. I think that's probably better. Rest the eyes, get some exercise. Really disappointed here though. My goodness. What if there's something I need to do that I'm not doing? Multi brackets, very definitely set properly. The multi brackets are what should put in all the targets and plot the targets, and then the break-even point is something I always kind of and reset on 0 position, you know. I don't know. But I still don't have my T1 right here. Wherever I got that, over here somewhere, I guess it was. Here I guess. Boy. So here we go. What do we got going on now? 11:10. A big fat hen. Quite a day here. Quite a range on the day. What is the range on the day? So far, yeah, so anyway. Well, you see how the signals are supposed to work, and I did this one and then not this one. Or this one. That's trading, the magic of trading, I guess. Someone would say. I would be hard pressed to take any other signals at this point in the day because of we've made a lot of ground up to and including over the into the previous value area and are not being particularly well received up there. So let's see where we go. And I'm going to add remove. Should be show or hide, I thought. No, I don't see it doing anything. Now I'm still working on these signals are only around the IBs, right? So I'm not taking, I'm not seeing anything on the value area lows or any of those other kinds of trades, and that's the way I'm approaching it. You know, all the other folks are doing mid flips and epoch migrations and whatever else. I'm trying to stick to the rules and stick to my plan. I'm getting kind of frustrated with it, but really disappointed in this bullshit. Had that gone just exactly the way I'd expected it to, everything plotted plotted properly, I would have, now I'm not saying 100%, and this is rear view mirror trading, but I would have taken the signal. I'm pretty sure, because I took this one. And I would have imagined I would have taken this one and probably would have taken this one. Having just gotten 12 points, back down another 12, you know. Would have been 160 ticks. Now that's not much compared to what some of the fellas are doing, but, you know. This just really irritates me over here. I don't know whether to put in a support ticket. I don't know what the hell to do. Or think, or whatever. Yeah, you know, you pay a lot of money for this crap, and all I expected to do is work. I have enough things to think about with the trade management and signal management and all of that. I don't want to be worrying about this stuff. Now, it did fire properly and execute properly, and all 5 contracts copied properly and all those things. It's just the graphics here. I want to be clear about that. And let me be sure I'm not just blowing smoke. So we traded 4 contracts. It was a scratch. And that's correct. But it didn't plot properly, and that's irritating. I don't even really care so much about the break-even line, as I said, but the targets are pretty important to me. And I'll have to go back to the stream, frankly, to see if the target was plotted here on the trade open before it was hit. You know? It should be just like this. This also doesn't make any sense. It's all screwy. Here is This one is correct when the target was hit. This is bullshit. Nothing happened down here till over here. Maybe there's a multi-bracket or something update that I don't know about, but I'm pretty visually acute, so this is important to me. That's the whole purpose of this backtest chart, is so I can visually confirm what's going on or not. Gap rules to the rescue. Notice what's right here. And what are the gap rules? If we close the gap relatively early in the session, and if we trade are accepted in value, we have a very high probability of trading across the value area. Oh, look where we are. Pretty amazing how frequently that stuff happens. Actually. Pretty crazy. Pretty crazy. I know this stuff and I'm not sitting here making money hand over fist. That's the part that chaps my ass. Don't eat my own dog food, apparently. Apparently.
Well, well, well.
Golly, that's disappointing. I mean, I did everything up to a point with my plan, but I have to be careful about getting tipped over easily like that. Or just be content with the fact that the market is a continual stream of opportunities and there's no such thing as a missed opportunity. There is only the next opportunity. Granted, I sure would have liked to have had this opportunity and then this opportunity. Oh yeah, magical. There is the gap rules to the tick. Pretty phenomenal, huh? And oh, I didn't want to do that. Come on now. There you go. What's Backtest Boy up to? I don't have all of the session prices on here, obviously, it should be obvious. My goodness, aren't I disappointed here, huh? Or here. This was the one I took and got my scale and my stop. This was the next one I did not. So, I think I've probably talked about that enough. Now, there is the underlying reasoning for all of this noise, and that is that I'm approaching and trying to develop, or I am developing, a trading business based on statistics and probabilities, not video game or gambling or, you know, something fun like that. And the way that I believe you approach that is as follows. You identify a setup. In my case, I'm using the initial balance trades and the parameters which qualify that setup to be an entry. Then you capture a statistically significant data set large enough to be outside the expected random distribution. And you determine if, you know, with math, does it have a positive expectancy or probability or edge or not? And if it does, then in the live trading market, you take that trade and those, you know, every time it sets up. And the thinking then is that you rely on the law of large numbers to manifest that edge to your bank account, or to your account, trading account. That's why I'm so focused on the backtesting story and that chart and everything, is because it streamlines the process. If, you know, I started out trying to just, if you stop and think about how long it would take you to capture 100 trades exactly, or 500 trades exactly the same setup and criteria, and you have, when you're vetting the trade, they have to be everything, all factors have to be equal. The stop, the T1, the T2, they all have to be exactly the same. Otherwise, they're not statistically significant. They don't, you know, if you change the stop losses or the T1, then that particular trade you've changed can't be part of your data set because it's not equal. If you want to answer the question, over X number of trades, I can expect to have or to achieve T1 75 times. Well, how can you possibly do that if you change T1 all over the place? Yeah, it should be clear, right? So that's where I came up with the, and, you know, following along with conventional thinking and wisdom, is that's where backtesting comes from. And it's not a secret or a surprise, you know, and I mean, if you stop and think about it, this is the trading system definition tool. There's a provision for backtesting. Now, I didn't make that up. This is a built-in component in Investor RT. Backtesting is is the bread and butter and the foundation upon which all the quant trading is built. So it's, and my recognition or my acceptance or understanding about identifying a positive edge and then relying on the law of large numbers and taking each one of those occurrences is not something I just dreamed up or some epiphany I had. That is the understood procedure and methodology by the most successful traders and hedge fund people in the world. Ed Thorpe, Jim Simmons, Paul Tudor Jones, Ray Dalio, Tom Sosnoff. Pick one, if you listen to Mark Douglas, listen to any of them, they'll get around to talking about probabilities and, statistical analysis. So that's why I'm doing this. And the reason that I've devoted so much time to the actual backtesting is because, it's, if I try to do it manually, even with the rules all graphically illustrated here, accurately illustrated here, if I tried to just scroll back day after day and pick out how many did this and how many did that, it'd take me forever and I wouldn't be accurate. And to get a statistically significant data set outside of random distribution, Jesus, I don't think I'd live long enough. So I believe you need some way of backtesting. And here we go, where, this IB, the gap rules are paid out to the tick so far. As just a side note, but there we go. We were accepted in value and we've traded all the way across that value. There you are. Back to the backtesting. So the way any backtesting system, whether you're good at Python or whatever you are, Quant Connect, whatever, or IRT, these are the specific rules for the initial balance trades. The IB continuation or the IB failure, one set of each for the IB high and the IB low. In IRT, at least, you can't set this up like a multi-bracket. You have to specifically create and spell out each rule for long and each rule for short, and end of day and all that stuff. And then here's where the good part comes in. You can set the backtest up for however many days. This is looking back 500 days. Let's look back. Come on. Let's look back 20 days. And remember, you notice that it's the ES, it's 2 contracts, it's the RTH session, blah, 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 blah. Okay? Backtest 20 days. Took 1 second. There's the profit. 33 trades, 16 long, 17 short. Maximum stop loss. This is incorrect because this has gotten more than $750 because it ticked into the end of day, which is not correct. I have to pick out which day that is and remove it from the data set. The maximum number here should be $750 because that's where T2 is. We had 14 winning trades and 5 losing trades. The R factor is 2.42. It's about a, 60 or 70% win rate. Now, this is incorrect because IRT was built and this report was built around all in, all out, not a scale. So you notice that there's only 19 trades here, total winners and losers. But there's 33 overall trades taken. That means the difference between 19 and 33 are scratch. What I do now is I take that number and then half of it was because a scratch is a winner and a loser, right? So half of of that difference is added to the winners, and half of that difference is added to the losers. And then you can take the total number of trades, which is 33, and you can divide that total number you get by 33, and that gives you an accurate win rate. And the formula for calculating expectancy is win rate, and this is, let me say something here kind of off the cuff. All of this crap you see on YouTube and everywhere about my win rate is 90%, blah blah blah, is exact BS, meaning nothing but clickbait. Win rate taken by itself is useless. You can have a 95% win rate and go broke in 10 trades if your risk-reward ratio is upside down. Think about it. So what you have to do is you have to look at it from the correct point of view. And it is a valuable metric when you're doing expectancy, because the formula is win rate times the average winner minus the loss rate times the average loser, or the average loss. That gives you the expectancy. In this case, it would be dollars, because IRT, I can't change these reports to ticks or points. They come out in dollars, and I put a ticket across the eddy, but we'll see. I don't know if I'll ever hear anything. Anyway, that's how you determine the expectancy, and then you know whether that's correct or not, and if it is, you apply those rules every time they present. And expect that over 100 trades or over 500 trading days, 700 trades, whatever it was, you should expect to have, well, that was something I should have showed you. Damn it. Doesn't take long. Here's something that's important to understand. Consecutive winners, consecutive losers. This is random distribution. Okay. Now, 2 consecutive losers in a row is not a big deal. That's 2 stops in a row. Won't you be happy if you get 7 winners to profit targets in a row? But on a larger data set, this can be 8 or 9. Therefore, you've got to make sure when you start the whole process that you've got your risk reward, as I talked about when I was describing how to set up the multi-brackets and the stop. The first parameter you've got to look at is your account risk parameters. You know, if you're losing $300 per stop and you take 10 stops in a row, that's $3,000. Is that more than you got? You know, does that blow up your account? If so, you got to adjust the stop loss and your risk tolerance. It's not mysterious, it's math, and it's straightforward, but you have to be sure you recognize the fact that there will be a random distribution, or a string of losers, and sometimes a string of winners. That's really important to get your head around and accept. And also, when that's occurring, you don't freak out and go, oh, I'm getting a different strategy. You need to know, you need to have done this homework, and you can say, well, over 500 days, I had 5, 10, whatever it is, 10 losing trades in a row, consecutively. So if I'm only got 6 now, well, that's still within my parameters. Hard to do, but that's the way you got to do it. Let's do this one for 500 days. How long do you think that backtest will take? How long do you think it would take you to manually backtest 500 trading days of 1-minute bars? It took this computer, 5 seconds. To backtest 493 days and to take 708 trades. long and short. Pretty amazing, huh? It's really comforting. I find this really, yeah, and here we go. Here's max consecutive losers in a row is 8. Consecutive winners in a row is 9. But for example, if you're up to 6 stops in a row and you're going, oh, this is crap, I'm throwing this out, you have not exceeded the normal possibility of random distribution looking back over 500 days. I believe this is correct thinking. If it's not, somebody tell me so. Took 708 trades, 249 and 216. You could figure out your expectancy from there, and away you go. And one other thing, I forgot to mention this, I think probably. With IRT, oh, I'm sorry. This thing doesn't like doing this in the middle of the day. It doesn't manage its resources very well, I don't think. Or it doesn't like the newer, like, why isn't that moving? You know, why aren't I getting? There we go. Now, what you can do is look at each and every trade from the beginning. This is, you know, it's struggling around thinking about it, but there's each and every trade and the outcome. The time, you can go back and look on the chart, whatever you want to do. To me, that's the only way to approach backtesting, trying to do it manually and ensuring that you eliminate, you know, discretion. Well, this is pretty close to the trigger, I'm going to go with that. That's not the way to do it. This thing is a computer. It evaluates every one of these rules over every 1 minute bar, however many days back you send it. And then it accurately takes or doesn't take that trade. And the outcome is as you've programmed it. Another pretty cool thing to do with backtesting here, using this system at least, you can set the backtest up for a historical period of data. For example, from the beginning of the data set to the end of 2024. You run the backtest. And then you optimize the strategy over that data. When you have it optimized as you choose, or as you want it to be, you can then take the optimized strategy, set up the backtest again, and run that over untested data. In other words, you can go back from the 1st of January of 2025 of this year till current. So you're running a optimized strategy that was optimized over historical data, and running it forward, or forward testing it over untested data. And that is, I believe, the way you're supposed to do backtesting. Don't know, but that's my story and I'm sticking to it. So here we go. Boy, did they ever have a nice run, huh? And the gap rules to the T. Really, really amazing. And like a doofus, I got scratched and didn't re-enter, and didn't up we go. So I hope that's clear. All clear. And we've had several excellent backtest signals, rules, and haven't taken them yet. And there you go. Now I'm going to start thinking about going for my lunchtime hike here because I'm pissed. My eyes hurt. I'm disappointed about this, and I need to think about what to do, whether to, I guess, send a ticket with a screen snap or something to Bookmap and say, what's up? What the hell is the story with this? Just for the sake of the stream here. This is the Bookmap 76 build 29. And actually, this build 29 is I got an update for that. I mean, it asked me if I would update to that version the other day. I don't know. What's today? Tuesday? So I guess it had to be Sunday, maybe. And I said, okay, I guess maybe I shouldn't have. Well, I hope you got on the right side of this some way or another and are, wallowing in your profits. Beautiful, huh? Beautiful there, no heat. However many that is. 16, 65, holy smokes. That's 35, 45, 50. That's 50 handles right there. Wow. Wow. Okay. I bet the music is about ready to poop out. Let's see, shall we? Still got a ways to go. I don't know how far, but anyway. I'll kick it over to something else before I leave. This walk takes me about an hour now. I try to get out for about an hour. I would wait until after the market, but I have to do the soccer dad family thing right after that. Get Tam up and fed and off to college and all that. And I drive her because I'm the soccer dad that does the driving here. So far. Purely out of their choice, but not mine. Well, that's just about a gigantous pisser, isn't it? And we had the big, oh no, just, Powell is just speaking now. He started at at 8:20. So Powell is speaking now, and apparently he's not scaring anybody, and the market's heading up. So there's a real good reason to be out of the market. He started at 11:20. Don't forget, down there somewhere. He's been talking right along. And nobody has come over the top of him with any craziness, except for this right there. Well, that's where he starts, yeah. Somewhere along the line down here was somebody going to put million percent tariffs on China or some Jesus craziness. And I want you to remember that there was no issues until they started all this tariff stuff. And I assume you realize that tariffs are a tax on the American people. And if anybody tries to tell you otherwise, you can inform them that they're full of shit as a Christmas goose. because they are. Simple. If anybody imagines that China's paying the tariffs or whoever, that island full of penguins, that's just craziness. It's a tax charged at this port. And if the importers absorb the tax, then okay. If they don't and they pass it on, up goes the price of whatever that was, and you pay it. So it, in effect, is a way of adding a tax to the American people to give a tax break to those handful of billionaire buddies. It's amazing, but it's true. What's even more amazing to me is that people don't realize that, right? Scary, huh? Scary. So there's no trades in my book over this lunch hour. What there is in my book is get your fat old ass out and do something. And boy, I really hope that somebody's on these trades. The signals were spot on, in context with the day, and I let myself get tipped over there and not take the next one or two, which would have been 2 targets plus. Whose fault is that? Mine. Something you need to remember here, and why I'm going for this walk every day now. I used to just do about 12 miles or so every Sunday, and then I got to reading or something that daily is much better, or much makes sense better for you than once a week. So that's why I'm doing it. Now I still do Sundays, but anyway, the point here is that the most expensive the most valuable instrument, tool that you have in your trading office is sitting on your side of the monitor. Think about it. Your brain is what your eyes, your brain are what take all of this data and input and stimulus in and make decisions which affect you financially. So you need to take good care of that thing. We make all kinds of, people spend hours getting the best monitor or whatever else it is, and then don't bother doing anything for themselves. You need to be hydrated. You need to be well rested. You need to be aware of yourself so that you know when your monkey mind is kicking up. You need to make, unflustered, clear, logical decisions. That's a huge, huge element to trading. You're, went out and got hammered, you're hungover, you had a fight with your significant whatever when you got back. I can promise you, don't grab the mouse. Don't start trading. Not that I have done any of that in 30 years, but the point is, you see the point. If you're on tilt, like me, just today, this threw me off. What happened to my target? Did it screw up again? Am I out of all my trades? Didn't take this one as a result. Now, I'm not regretful of that because I confirmed that the situation was as I had expected it to be and correct. The last time that happened, it did exactly this, said exactly that. And I'm sitting here, standing here watching the market, and price goes down to the previous stop loss, and 2 more contracts stopped out. I mean, 2 more accounts of 2 contracts each stopped out. Because the copier and that execution system had not executed all 5 contracts, only 3. That's why I immediately jumped down here, over here, and to Rhythmic. So I'll be really pleased when I get through this in the XFA and into a live where you're only at 1 account. All right, I'm going to head for the not abuse myself. Have a great lunch. Watch for the. We are in a situation where the 12-to-1 trade would be a statistic, and that says that the market must be out of balance, which we definitely are. If we put in a new extreme on either end between 12 and 1, there's a high probability that we will exceed that in the balance of the trading day, in the balance of the RTH session. It's exactly the same idea as the IB trade, the IB statistic, except it's around the 12-to-1 area instead of the IB. So instead of having to wait from 9:30 in the morning, you can wait from 1, you know. There you go. Okay, what happened? POC, VPOC migration. Are we all rich yet? Yeah, probably. Quite a nice, definite uptrend. And here were my IB scratch, non-taken trade, and the rest is history. I'm going to send a ticket off to Bookmap now. Got done with my hour and a half. John, let's see how far. 3.3 miles. Well, not much, but that's every day. That adds up. Okay. Wow, yeah. Well, I hope somebody got something. I sure as heck didn't, but I mean, I took a scratch on the setup, but yeah.
With Bookmap support here, I may need to do some crap and get the log files, etc. So stand by. So we approach the world famous power hour. And then one more hour to the cash close. Look at all the liquidity laying up here. Wow. They're pretty fond of that overnight high, huh? Why? I just got off the deal with Bookmap support. They've created a ticket. I sent them screen snaps, and now I'm going to compress the log files and send them only after the stream because I need to shut Bookmap down in order to export and compress the log files. Yeah, well, let's hope somebody got some of this. More bread. At all. No problem. I just like it. You want aspirin? You want a hot water bottle? Okay, the power hour is upon us. What a classic gap rules day. Really classic. Still surprises me how frequently those old market profile isms pan out. That's for sure. So what have we got going on here now, boys and girls? Well, here's the blue boy. This, remember, that's just flags my session open. What would you think context is? Pretty much up, huh? Here was my IB continuation trade here. Scratch. Took T1 and scratched. Because of this improper printing here, I did not enter again. And of course, just, you know, in typical rearview mirror fashion, look at this. Or here, even if you took this one. Yeah. So there you go. And a lot of liquidity jamming up here. I'm not sure exactly what they're holding on to, but they're holding on to something right here. They don't want it getting too far over 76 or 6,700, I guess. What have we got around the horn here? Oh, so here we go. In the final hour. Nice day. I'm sure that there's a lot of happy traders today. I hope. Well, let's take a look at the backtest story here. This is the backtest chart, which doesn't have anything to do with backtesting, except these custom indicators I built. Obviously, there's ones for both. And the signal markers accurately reflect the rules in the trade system. And I find this real handy to refer to. And in fact, I traded off of it today for the long over here. You'll notice that I have a pullback zones down here, and I have a continuation zone up here. And those are pushed over to Bookmap. There's the continuation zones and there's the pullback zones. I don't have the trigger because it's essentially 1 point either side of the IB high, and I don't want to get, a million different. Got quite a few lines over here now, right? Don't need any more. Sometimes I look at some of these guys' charts and I cannot see the price. It's really, I'm really happy that they can trade that way. Good for them. Whatever works for you, do it. But I can't even see where price is. It's really astounding to me. I admire them. I'm pretty much a KISS principle person. So anyway, here's our backtest chart. And this is how I normally watch it during the day, in case you weren't around. Can be, can make it bigger or little or whatever. I try to keep it out like that so I can really watch what's going on with the different, the rules all evolve around open, high, low, and close. Different places, those rules matter. So that's that. Then I also, but again, the rules and the levels over here don't have anything to do mechanically, or I should say automatically, with the trading system. This trading system is not attached to this chart or is not active in this on IRT at all, because I use it only for back testing. You could set this up to trade, right now in the live market if you wanted to. It has that capability, but you better be sure you have your rules figured out right. Anyway, I'm going to, so what I do then is after hours, I back test, make these rules. What I'm doing on the chart in this live market is confirming that these rules are right for me. Then I can do the back test, and that's where you can really save time and get accurate data to vet your trades. And that's the whole point. I want to know what my expectancy is on my trades. And I actually think I'm going to want to, I have them coded IBC, IB continuation trades, or IB failure trades. This is a grouping of both. These are all the IB trades, and I'm not real sure how I want to break that down. From how granular I want to get into it with statistics, but that's the way it works, and it's so handy. For example. This is looking back 500 days in the ES, and granted, this is the ES Z contract didn't go back 500 days, but the ES continuation contract did. So it knows enough to do that. This is for the day session only. 2 contracts, and then these reports. Want to know how long it takes to run these rules over every 1 minute bar in the RTH trading sessions going back 500 days. Takes 5 seconds. That blows my mind. I've spent hours standing here looking back over a week, or 2 weeks or a month. So at 493 days, I took 708 trades. There's the profit. A lot of metrics in here. There's the largest loss. I know this is incorrect. This is for the 1st of May, 2024. For some reason, the trade is triggered accurately. T1 is executed, but T2 is not executed, and it goes to the end of day. Now, nice mistake to make if you were in the trade, but this is for backtesting purposes only. And then you have, average winner, average loser, and you can figure out the percentages of your win rate and your loss rate percentage based on you have to remember that in IRT here, this report, these are 708 total trades, and there's only 465 trades that were either winners or losers. That means that the balance of this number is scratch. So what I do is divide the scratch trades in half, because half of them are winners and half of them are losers, and add them to these values. And then I can accurately calculate the win rate and the loss rate. You need those two values to calculate your expectancy. These guys that quote win rate by themselves, my win rate is blah, blah, blah on the YouTube, are just nothing but BS artists. And this is the profit factor. Then you can do many things. Here are the consecutive losers and the consecutive winners. Consecutive losers. This is random distribution. There were 8 stops in a row. One stop, full stop, is $300 or 24 ticks. Can your account support? Does it have the risk parameters to support $2,400? Because 8 times 300 is $2,400. That's the kind of way you have to analyze your trade size and your stop size. And if it doesn't fit if it does not fit the market or the volatility, then you've got to do something about the instrument. Now, I'm trading as I've shown a million times, and will do once again. I'm trading a multi-bracket. This is the risk-neutral methodology. 2 contracts, 12-tick stop. That's 3 points. 3 times 2, right? Because it's 2 contracts. Then the first take profit is 1 or half of the package size at the same number of ticks as is the stop, only positive. So the minute you achieve this target, the trade is risk neutral, and then you have the runner. Now, if it comes back and hits the stop, that's a scratch. And that's where the difference between 704 and the total winners and total losers comes in. But you have to size your package size and your stop loss size to your account risk tolerance and the volatility of the market. Is the market really volatile? Here's 4 contracts at 24 ticks. Can you possibly afford that if you took 8 of those 8 stops in a row? You have to know that before you before the trading day starts. You should have all of this planned and worked out in your mind while it's cool and you're not, your monkey mind isn't fired up or anything else. And if you cannot, if your risk tolerance doesn't allow this, then you've got to do something else. What is the something else you can do? This is the smallest package size you have. Well, let's start over. Let's say you're trading a 4-lot and you can't afford the risk. What can you do? Well, the first thing you can do is size down. Now you've cut that 4-lot to a 2, so you've cut your risk in half. If that's still too much for your risk requirement, the only thing you could do is move down in contract. So you'd have to go to a micro from the mini in the case of the ES. But you've got to know that before you get going, because you've got to set all this stuff up. You've got to set up your book map, your charting, all those things. You have to be ready, right? It's like taking off. It's like flying an airplane. You don't start wondering if you got the engine started and the radio tuned in and all that kind of stuff while you're while you're rolling down a runway for takeoff. You don't do that. Or after you've just gotten off the ground. You know what I mean? That's not how it works. So that's just a little primer on how you set yourself up and how you think about it, or how I do it. And all of that stuff is pre-coded in over here. The risk neutral 2-lot package is what this is trading. All of those statistics that you just saw are based on a risk neutral 2-lot package of the ES. So there is that. $20. I'm going to see something here. I just noticed something I've never looked at. I don't know what this account balance chart's all about. I hope it doesn't break something. Oh, I see. Okay. So here is our 80. There's our profit in 20 days. Took a second. We've got 33 trades. We've got 16 and 17. We have 14 winners and, come on, 5 losers. That's 19 trades. 33 minus 19. That balance we need to divide in 2 and add to the winners and add to the losers. And then we can figure an accurate win rate. And we already have a profitability factor of 2.42. Then you can determine your expectancy and know whether over a series of trades that you are within parameters or not. Consecutive losers is 2. That's very manageable. Consecutive winners is 7. That's super. 7 times 7 is 28. So say $3,200 against $600. Pretty good. Safe. That's called compounding your account. And then again, if you want to be real precise, you can go down here and look at each and every trade, exactly the date, the time, the type of trade. This is the entry time, the time of trade, the results of whatever exits you had, and the dollar volume. It doesn't do, I can't switch this to ticks, which I prefer. I don't like thinking about in dollars, but IRT has it set up this way and I can't change it. So there's a full stop. Now this is one of the ones that is goofy because of this thing right here, and I'm not really sure why it's resetting this value 451. But that gives us, instead of $150 here, it gives us $450. So we made $1,050 on this trade as opposed to 750. Good problem to have, but I still don't like the fact that it's doing it. So I need to dig into that even further, and you can look at all of them. What I want to see here is what in the hell, what this trade thing looks like. Oh, this is the profit. This is the profit graph for each day. And there is the tick bar. What is this? 1 minute ticks, 1 minute bars. So this is the account P&L. For every trade. I guess I've never looked at that before, to be real honest with you. I'll have to figure that out. I'm not sure if it makes sense to me or not. Okay, so we're going to round the curve here for the final home stretch pretty quick. We'll take a run through the roses and look at the news and what upcoming reports we have for the morning. Remember that the stream starts every morning at 0800 Central Standard Time and runs nonstop until 1500. And yes, I step away. Like I went for a 4.5 mile jaunt here at over the noon hour, and we didn't take. We haven't satisfied the 12-to-1 stat yet, which says that if we make a new high or low between 12 and 1, then there's a high probability we will exceed that in the balance of the RTH session. So there is the high. There is an excess, not by much, but there's an excess at 10 minutes to 1. So if that statistic is going to be validated, we've got to come up and take this out at some time, at some point. Now remember, the trading session actually ends at 1600, not 1500, which is when I shut things down because that's the cash close, and I'm done at 1600, at 1500. Here's the, what do you reckon we are for volume? Well, I can tell you right now by looking at 1.7 million, we're high, we're way high. Yeah, we're 130% volume for this time of day. And we're at 4.5 ATR. Now, pretty quick when we have the, at about the bottom of the hour, I'll do the recap. And then the only other event that really is usual is the market on close imbalance. And the close, of course, the cash close. And I will be happy that that happens. I'm disappointed about my trading, except I did, it's just scratch is a scratch. Here's what's disappointing to me in case you're new to the stream. This break-even line is completely goofy. This line for this trade should be down here. Because this is the entry. The minute we have the T1 taken, which is right there, the break-even line, and that's the whole point of the risk-neutral scale. The break-even line is the stop. In other words, the final contract is riding free, riding for nothing. And there was the take profit, the number 2 take profit. So had this not stopped, we would have had that, or had I not been concerned about what was going wrong here and taken one of these, the rest is history, isn't it? But woulda, coulda, shoulda, that's all rearview mirror stuff. I am showing you the problem here. And this is supposed to stop the minute the trade is closed. The minute there's zero position, this is to be stopped. And it's worked fine up until, I guess, maybe this last update. There's always something. These programs are pretty complicated. So here we go. Oh, I'm showing the wrong stuff. Sorry. Here we go. This is supposed to be down here, and it's supposed to end right there. Here was the target of the stop. The minute we got the scale, this line should have come down here, and then the minute we took the stop right here, it should stop. This line should quit. Pretty simple. I'm sure they'll figure it out, or something will happen. Okay, let's look at what the hell is going on else. Well, let's look at the snooze. This is investing.com. Both of my news sources are free. You can pay for them if you choose, but this is investing.com, and I like the way it presents for screen snapping and putting into a Discord room or something like that. You can just grab a snap there. It's got the time. It's got everything laid out nicely. This is today. Here are the economic reports for tomorrow. Not much happening. Let's look at this week. Thursday, a bit more hectic. Retail sales, Philly Fed. And Friday, they're hoping for the non-farm payroll, which is now two Fridays skipped because of this shutdown story. Another exciting adventure is that earnings season has started this week. We've had these earnings out today, and we'll have all of this stuff the rest of the week and next week and on and on. The other, again, this is free, and you can filter for your time zone, country, what reports you're interested in. If you only want only want to look at 3 stars instead of 2 or whatever. You can filter it any way you want. And this is Financial Juice, which is a more recent source that I've started using a little bit. I don't like the presentation of the calendar here as well, but I do kind of find the Squawk Box to be handy. And of course, Trump is he doesn't care whether it's a good program or a bad program or it's helping millions of people. He only cares that it was put in place by Democrats. That seems so weird to me. After you get to be in that job, you're supposed to be representing all the Americans. I don't know. I don't get it. Anyway, nobody's asking my opinion, so no problem. And another thing about the Squawk Box that I said earlier today, we have an potential critical risk at all times, and that's got to do with this stuff right here. And if you don't think that's true, go back and look at 10 o'clock in the morning, Central Standard Time, last Friday. And you look at what this guy tweeted, and 227.7 points drop later, the market closed. Out of no place. No precursor, no nothing, no announcement, no anything. A tweet on his social thing, And that was that. So that that is the quintessential description of random critical risk, you know. You can't plan for that. That's why I say only take A+ setups and limit your account exposure to the market as best you can, because you never know. It had nothing to do with political anything. It's just the fact. It's a fact about risk. It's simple. So there we are. And that brings us to IRT. We've just looked at the volume. We've looked at the backtesting. This is the market profile or the higher time frame chart, and it is a RTH session only. Daily bars, wherever they overlap, I draw a volume profile around them. And I'm going to have to think about this area down here, because this ridiculous thing on Friday, I don't know, you know, with these big gap down, and now we've got a big, this closed the gap and then some today. And I guess I'll leave it as it is and just keep extending it and see what happens. That automatically generates these high and low volume nodes and the market, you know, MCVPOC and that stuff. The high and low volume nodes push to Bookmap. So do the session prices. And this is the market profile, the ES Mini and NASDAQ Mini. And that brings us back to the ranch here. Now we have a market on close imbalance, which will happen at 1450, and they come out over on this thing. I can. There you go. Market on open imbalance right here. It'll look like this. We're only going to say MOC. That's simple. And then we'll see what they are. And that's how it works. So, yeah. Keep your powder dry. I hope you did well today. I wish I would have been able to do better, but, you know, this is trading, and I'm trying to stick to my rules. So, there you go. 5 minutes, huh? So, boy, oh boy. Started below the yesterday's range and are closing either just on it or just above it. Couple minutes here till the market unclose. What in it? China purposefully not buying our soybeans and causing difficulty for our soybean farmers. An economically hostile act. Jesus Christ. We're threatening them with 100% tariff and all kind of punitive stuff. And what does he expect they're going to do? I mean, I'm sorry, but it just makes no sense to me. That kind of logic is only speaking to one group of people in this country that can't think for themselves, I believe. I mean, he's talking to his base, I guess. On Friday, he threatened over 100% tariffs on everything from America to China. Why do you think they would want to buy our stuff? Because we're so cool? Maybe I'm missing something. But what I think is important to remember is that the second largest holder of American United States government debt is China. Now, if you want to walk into the bank, piss all over the banker's desk, and then tell him, oh, and by the way, I want a loan, how far do you think you're going to get? And that's essentially what we're doing. I am not sure that all the consequences are being looked at from every point of view. You know? It makes me worried. And all this crazy... I don't think policy should be conducted on a private social media thing. Subscribe to primarily, I don't know anybody that subscribes to Truth Social except all the MAGA people. So, is he just, preaching to the choir or what? I don't know. I really don't understand what's going on in this country or at all. It makes no sense. And that's fine. I mean, I'm not saying that I'm important enough to be considered there, but it's pretty weird to me. That's for sure. So there we go. Where's our market on close imbalance here? Basically nothing happened on the market side of life. A little boop. Of course, this Truth Social thing must have just come out. So here's the market on close imbalance. Minus 144 million on the S&P, minus 391 million on the Dow, NASDAQ, minus 112 million on the Dow, and minus sell side, in other words, 201 million on the Mag 7. So there you go, down across the board. I really don't get a... So there you go. The day's going to wrap in another 8 minutes, and I'm going to be happy. I'm going to get those those logs zipped up and off to Bookmap. Hopefully that'll get sorted out. And my eyes are bothering me. I'm going to put some drops in them and give them a rest. I have no problem. I mean, I took a trade, but so what? You know, a scratch is useless. It's on the right, in the right direction, the right thinking. So that's reassuring, I guess. Rest my eyes, get our daughter straightened out and over to school, and then picked up later, and then I can have a little time to do some back testing and some thinking here. And that's about the way it works. So, yeah. Okay, 4.5 minutes left here, boys and girls. I'm happy. I'm tired. I'm gonna jump in the shower, put some drops in my eyes, and come out with a fresh attitude. He leaves out the part here that they're buying soybeans from Brazil, also attacked by the Trump administration with tariffs, at a much lower price than the American farmers and America wants to sell the soybeans for. You know, it's, if you piss off everybody and then try to charge double and get mad because they're not buying your stuff, I don't know. Seems like there's something wrong with people that think that. I don't think that's a sound truth, thought model there. I don't think. Wow. Staggering. Staggering. And we are actively, overtly, and aggressively trying to basically wipe out a huge section of China's manufacturing, which is their economy. So are we causing problems for the China manufacturers and the China workmen? You know what I mean? You see the point? It's pretty weird. Pretty weird. I don't think it's going to end well myself, but we'll see. I think this day is going to end pretty well, though. It's 8. We've got a minute and a half left. And boy, I don't know whether the market has come to a complete halt or what, but it hasn't moved. Or the data's off or something's happened. That price has not moved in 30 seconds. What's going on? Something's going on. There's got to be a problem with the data. There's nothing happening here. That price hasn't moved in a minute. And notice how far price has traveled, how far the time zone line has traveled until we've had a tick. So it's shut down. It's finished. Something's wrong with the data feed. Oh, that's pretty cool. Maybe not. Jesus Christ. You can tell by this big long feed line there, right? Well, there's 1,500. So yeah, this is just magical. I don't know what to tell you, but we didn't get anything for 30 minutes or 20 minutes there. 14:32 to now. There's no data. Oh, now all of a sudden it's nothing. And no flags about the data. Nothing. Well, okay. Let's hope tomorrow's better than today. This is a cluster from every different direction, I'd say. This is a pretty big cluster from every which direction. Looks to me like. Oh well, have a great night. I'm toast. Now I typically let my Bookmap and IRT, run until the market closed, but this is kind of stupid. Well, I'll let it tick here and see what happens. Have a great night. Remember to take care of yourself. Get out and get some exercise. Take care of your eyes. You are the most valuable tool you've got in your, or piece of equipment you've got in your office. And drop back in the stream tomorrow morning at 0800 for the pre-market. Thanks a lot.